We've all been waiting for this moment. The king of AI itself, Nvidia, just reported earnings. And this is talked about like the company that really represents the entire AI movement, the entire bull market that we're experiencing. A lot of investors want Nvidia to go up, so every other company goes up with it, because Nvidia has become emblematic of the entire broader market. So we have the market today taking a pause, taking a breather before Nvidia's report, and we finally got the report. Let's go ahead and take a look. The first thing I'll point out is that Nvidia stock after hours is not really moving that much. It's up 2%, 1.5% now if I refresh it to make sure we get the latest data. We're at 1.5%. Now, of course, this can change. So if we get some commentary on the call or, something changes, this could bump up or down. But this isn't the normal reaction we see with a dramatic climb or a dramatic fall with Nvidia. Right now, it looks like it's just teetering into the positive. When we look at the headlines look really good. We have Nvidia reporting a record 262% jump in sales. That's revenue on a year-over-year basis on the continuation of the AI boom. Nvidia did beat on the top and bottom line. $6.12 is what they reported against $5.59 expected. So they beat on the earnings. On the revenue, the whisper expectations from Wall Street around $24.6 billion. Nvidia posted $26 billion. So again, they beat on the top and bottom line. And they also gave guidance of $28 billion this upcoming quarter. So they still believe they're going to continue growing. Now we'll look at more of the revenue growth in a minute, but I first want to look at some of the commentary on the earnings report because they mention a few important things. The first thing is they mention a 10-for-1 forward stock split, effective June 7th, 2024. So this is the same type of thing that Chipotle did, but to a lesser extent. You chop the shares up so that they're in smaller pieces. It doesn't change the intrinsic value of the company, but it can make it more accessible to more investors. Now they mention on this report the greater theme and the greater bull case for Nvidia and AI, saying AI will bring significant productivity gains to nearly every industry and help customers move more cost and energy efficient. They say that we're poised for the next wave of growth. They talk about their Blackwell program, Spectrum X, Nvidia M, CUDA, and so on. All these different applications that they're running on top of their GPUs. But we have the main theme here. Nvidia's growth is almost entirely in their data centers. If we look at this on Qualtrim, and this is a website that you can try out for free, it's included as part of the Patreon, but what we have here is some data on Nvidia. Specifically, we have the most recent data broken up by segment so we can see visually how much each of these are growing. Now again, this most recent quarter combined was around $26 billion per year, but the majority of that revenue comes from one segment. If we cross out everything but the data center, we can see it clearly there. If we zoom back, you can see that the data center growth was there, it was growing, but the growth over the past couple of years, from 2019 to 2023, it seemed like it was pretty muted. And then all of a sudden it hit this pivot point right here in Q1 of 2023. Ever since Q1 of 2023, the data center demand exploded, going up multiples every single quarter. It went from $4 billion in revenue to now $22 billion in revenue. And that's why Nvidia has gone up so much over the past couple of years. This growth quarter over quarter, not year over year, but just quarter over quarter, was 23%. Out of all the business segments, out of everything they're doing, it all really comes down to the data center. If we look at gaming, this is a smaller portion of revenue, but it went down. Gaming declined 8% quarter over quarter. If we look at professional visualization, this is again a smaller portion of revenue, so it's not quite as meaningful to begin with, but this was another segment of revenue that declined by 8%. Finally, we get to automotive. This section did grow this quarter, but it grew by 18%. Now that's great that automotive is growing some, but if you put it in perspective, it's a very small segment of revenue. You can see it right there at the top. It makes up a tiny portion of Nvidia's revenue. And even all three of these segments, with two of them not growing, if you look at it in comparison of their data center, you can see that the data center is becoming an increasingly bigger and bigger portion of their overall revenue. So again, we check on how the stock is doing here after investors are seeing all of these numbers, and it's up only 3 to 4%. Now, why is Nvidia only up 3 to 4%? Because none of these numbers, none of these revenue segments, the earnings, were well above expectations. They're mostly kind of in line of what investors were expecting. When a stock performs similar to what investors are expecting, you don't see too much of a movement after hours. And for me, looking at this, I think this is further evidence that Nvidia may finally be entering into that phase where it doesn't have the massive aftermarket moves that it previously had. It's now in the phase where it's a bit more mature, they're being more accurate with their predictions, analysts have caught up to it, and I think a lot of investors that are in Nvidia and have been in it for a while, they'll be happy with these results. I think they'll be satisfied with them. But I also believe that a lot of newer investors that have entered into the stock recently, hoping they can get those outlandishly huge returns, may be disappointed because you cannot buy the previous returns of a stock. Nvidia is already a massive company. It trades currently at a market cap of $2.4 trillion. Unless Nvidia can return to its once again unexpectedly huge growth, I think we're going to see more earnings reports like this. That's all for this time. See you in the next one.